Hi, I'm Mark Wooster. I'm Chief Investment Officer for Calibre Investment. Today we want to have a look at a couple of traps people fall into when they're looking at returns or performance when they're choosing investments. So the first one is bigger or better, or going after better returning investments. And the second one is peer comparisons, or looking over the fence at other funds and investments. So let's look at the first one, bigger is better. So it seems logical, we all want bigger and better returns, but this often results in what we call return chasing. And the problem generally is that the higher the returns, the higher the risk. So that old adage of higher returns and equals higher risk actually holds true, especially over longer time periods. So if investors fall into the trap of return chasing, they actually end up by increasing the underlying risk in their portfolios quite substantially over time. And we saw this with the GFC and also with COVID-19. The risk results in some pretty bad outcomes. And we've seen this recently with investors when they were trying to compensate for lower interest rates just prior to the COVID-19 crisis. And we saw a lot of investors taking on equity or share risk instead of bonds and taking on much lower rated bonds. And they were trying to do that to maintain and increase their yields, which again is perfectly natural behaviour. The unfortunate thing is they ended up with some risk exposures they didn't expect and some outcomes they didn't expect, which weren't that attractive for them. So the other trap is peer comparisons, or comparing funds in one category against one another. And again, it's perfectly natural behaviour to look at funds in the same category and say which one has done better, that must be the better investment. The problem is that funds with the same label in the same category are often quite different. So in reality, trying to compare funds is really far more difficult than it looks. And again, you can end up drawing the wrong conclusions about these funds and ending up with some results that hurt the investor. So in summary then, we're not trying to break the habit of looking at returns. It's perfectly natural, we're all going to do it, but what we do need to do is put it in perspective. And the best way to judge investment solutions is, one, have a plan, where you want to go, what you want to achieve, and then number two, align the investment solution with the plan. And so in that process, it'll take a bit more work, but you'll end up with a far better outcome. So thanks for watching, stay tuned for our other videos and stay safe.